Hello everyone. Today we are talking with Kosta. He is a serial entrepreneur. Um, he spent a lot of years in fintech. His last project is Money Zebra. This is an auction of some kind of marketplace for buying loans from Africa, Ghana. Currently, Kosta will correct me if if I'm wrong. Hi, Kosta.
Hi, Sergey.
Will you share some notes from your experience? How have you came to that point where you are? Because as I've seen from your LinkedIn, you've spent not your whole life in fintech area, as I understand. How have you transformed into this area, and how have you came to Money Zebra?
Yeah, that's true. I wasn't always within the fintech area because historically I had companies that supplied different sort of things like physical devices and technical security systems like security cameras, access control, etc., etc. But I finally ended up with a meaning that it's kind of not too profitable and not too lucrative to be within this field. And someday I decided to close my actual businesses and move beyond my comfort zone and explore something new. At the same time, there was an ICO boom back in 2016, 2017. My fellows accidentally invited me to join their initiative in terms of some fintech project in my past. I wouldn't say I got through the whole concept of the blockchain at the very beginning stage, but then as soon as I explored the area well and as soon as I got well educated by many people I met on my way, I fall in love with fintech. Is because fintech is something when the need comes and the service provided goes to the customer, and in the middle you charge your commission, and you always charge your commission. This is an art of fintech. You always paid.
Have you spent a lot of time learning it, speaking to people? What have you done? How has it become possible to dive so deep to fintech, to see the opportunities to create a
It wasn't
startup?
that obvious at the very beginning. It's because I experienced many difficulties within the area. At my very first steps, I decided to go with at least 2 or 3 wrong businesses. What I have done, I've invented an idea based on talks and my market expectation needs. Then I found myself with a wrong project in hands because, again, getting back to the ICO era, you could see many token swaps appeared at the end of this ICO bubble. That's how I decided to build an automated escrow platform for token swaps between startups, between projects, just to make them more valuable, etc. But the idea was wrong. Is because the majority of ICOs became scam projects, and their tokens costed almost nothing. That's why we have been pivoting to another idea. We tried to build a sort of an investment fund into different ICOs, but again, it was a wrong idea. Then we decided to launch an investment platform. I and my partner, we tried to build nice, very attractive, easy to go mobile application with an investment opportunity to replace this application and replace Instagram, replace social media for commuters. Just give them an opportunity to consider to George new and brave projects and maybe invest £5 into each one. And it's like ongoing investments with tiny amounts for a bigger thing. But again, I and my partner with this third initiative, we ended up that we are not able to move it forward. That's why we decided just to freeze the idea. And I would say that only after maybe 5 or even 7 attempts I did in my past, I finally found an idea I like, and idea that got some proof from people I had been talking to. It's always like tries and errors when you are starting something new, and especially within the totally new area for you. That's why it's a long journey to get the right idea, but it's much longer journey to get it up and running.
So, how long has it took to make 5 pivots, 5 experiments? How many years?
It's a piece of beauty because you don't need to do them one by one. You can perform a few at the same time. That's why, and also you could take them in parallel. Is because you can invent an idea and you immediately want to evaluate it, and you spend a couple of weeks talking to friends, and someone could say, hey Kosta, do you know these guys are already doing this thing? And you think, no, yeah, I can't go to that level, and you decided to give up with the idea. I would say I spent about 2 years to evaluate those 5 ideas, and finally decide to call off them and move to something very new, very brave, and invest massively. But on your journey to distinguishing the good idea, the most difficult point is to stick with a single idea and keep your belief in it and keep developing it.
I see. Then the other question, when you have decided to shut your business, or I don't know, maybe you made an exit from that, I really don't know, maybe you will share it. The question is, that business, as I understand, was pretty much profitable, and you had a lot of employees there. How the decision to move further came to your head? Why have you decided to change your business?
Yeah, some businesses I successfully sold, but some businesses were acquired by my in other initiatives or transformed into something new. But a couple of them just experienced bankruptcy.
I may be talking about this company, which AK Techno. There was 50 employees there, and what
we had this company for years, and you're definitely right. But it happened somehow. I transformed this AK Techno as an integrator into a technological arm for my other business, Countbox. And AK Techno became a part of a bigger company that at some day went beyond the regional market and stood out as an international company.
I see. Because sometimes shutting down the business and moving forward is not a simple solution, and the transformation is that's right decision, yeah, from my point of view. Absolutely right. And if we speaking of now, Money Zebra, why Africa? Why are you there? How have you noticed that this is a very evolving market? Why you decided to create marketplace there?
I think all you have and all your decisions depends on your experience. What have you done in your past? In my past, I lived in China for a while, and then after my Chinese experience, I lived in Africa, in the North Africa. That's why I did understood. I did understand both markets, Asians and Africans. Then there is a huge cultural bias between these two cultures, and it's almost impossible for them to negotiate, especially in terms of small deals. That's why I found this opportunity to connect these two totally separated worlds. And again, at the same time, I knew about an opportunity to borrow money from a big bank almost at a zero cost in China in RMBs, but it's a huge demand in Africa for nano loans, micro loans, payday loans, layaway loans, and a long list of short capital. But this short capital in Africa brings you to interest rates between 800% to 6,000% per annum. That's how interest rates are crazy in Africa. But bridging these two points, the Asian capital and African demand, I bring enormous opportunity to invest into African economy for Asians, but and at the same time for Africans, it's much more affordable money and capital from foreigner compared to the local interest.
I see. And can you hear me? I think
Yeah.
the question is about the risks on your platform. If somebody buy a loan, how does it work? Do you have some local partners who actually take the leads and then you sell those leads on your marketplace, or how exactly do you do that?
Yeah, exactly. Some people call our partners leg breakers, some of them. But yeah, we do have some associates on the ground who are keen to explain to our bankruptcy people, and their key advantage is a possibility to explain it, to convince people to pay back. It's because they do speak local language, we don't. That's why we have some support on the ground.
I see. And if we look into the risks, what's your place in this model? I mean, the money always transferred from the banks and other loan providers to you as a deposit, and then you provide those funds to your customers, or how does it work?
Yeah, it worked roughly as the way you explained. Yeah, but we don't take deposits, and money goes directly to borrowers.
And you, regarding your business model, do you earn money from the each transaction?
Yes, we charge all parties from each transaction.
But I don't understand the risks. If the money transferred, how many sides in those deals? It's always 3 or only 2?
I would say that there are at least 5 parties involved to
Mm.
get money delivered and a loan disbursed.
Mm-hmm. And in case of default, what happens in case of bankruptcy?
Where very politely will ask our bankruptcy people to pay back. If
Uh-huh.
they won't, we will invite our associates to negotiate with them and to convince them to pay back.
Mm-hmm. I see. In the most uh, in the worst situation, who take the risks of those payments which are not made? I mean, who pay back to the bank, or is it your problem or not? I mean,
No, it's not. It's not uh, our service. It's because we are not investing money. We don't take money and we don't make investment decisions. Investor or lender or liquidity provider, as you want to call them, their nature is to estimate the risk in the front of them and make investment decision. This
ah,
is their loss if they don't get paid back. It's because
I
it's their
see.
nature to make investment decisions.
Very interesting business model. It's like a Uber, but in the loans in Africa.
I would say it's just a matchmaking marketplace. It's because we connected two dots, and also we've built a solid and robust legal framework that allow almost any company from around the globe to lend out almost any amount of money through us to Ghanaians, to Nigerians, to Kenyans, individuals and businesses. And again, at the Money Zebra project, we could take, let's say, £10 of your money here in London and deliver them for 3 seconds to Ghana-based mobile wallet or bank account. This is a piece of art. This is our another key technological advantage. We are very rapid remittance service.
Mhm. Uh, um, 1 second, my microphone just do something wrong.
No, it's okay. I hear you well.
I hear it too. So, in other words, you work like in information agency, some sort of that. I mean, you don't. Um, there is no flow of money through your bank accounts. The
No,
you only charge for the successful deals, I guess.
we would position ourselves as an advertisement space.
Mm-hmm.
People who seeking financing, they post their applications. It's like ads about money needs, and financial suppliers or liquidity providers are distinguishing in which applications they want to invest, and we just arrange a connection between two of them and charge successful based arrangement fees.
Mm-hmm. I see. And by the way, which what rates could be earned on your platform? I mean, rates are different in different parts of the world. And what happens in Ghana, for example, in average, maybe if I would like to invest in on using your platform, for example, how much can I make per year?
It's a quite philosophical question. It's because in how risky opportunities would you like to allocate your money?
Mm-hmm.
Let's say if you are willing to give away your money to an individual who is seeking £20 for a couple of days, this is one risk, and there is nothing behind this applicant. This is like one story, and you can offer, I don't know, 1500% interest rate per annum for these 2 days. But for those much more advanced customers, like companies with bank statements attached to their application form with something as a collateral, probably you will be happy to consider to lend them at 30% per annum for a month long, for instance. It depends on you. Again, we don't limit our liquidity providers to with our own opinion on the risk estimations. So they getting access to a whole information we have, they value the risk and they offer whatever they want, even if it's going to be 1000%, we don't care. Our job is to take this offer and deliver the offer to the applicant. If the applicant agree to take the loan on the offered terms, we arrange the deal, done.
Mm-hmm. But anyway, the market always says to the loan providers which rates they can offer and what it is about. Is it 10%, or you said 30% for low risk customers is possible to make in Ghana?
Yeah, but actual loans are about 120% per annum for businesses with collateral behind them. Because Africa, it's quite vibrant market now. And if you could consider, after all risks occurred to you, probably you will get up to between, I would say, between 40 to 70% per annum based on your investment. And it's like and even this big huge interest rate you will be able to earn and yield at the Money Zebra platform, it's less expensive and much more affordable compared to local offers. That's why I would say we do a good job by bringing in more affordable money. But going to the philosophy of cutting rates down, we embedded an auction engine, an auction model. It means if you are a brave guy who wants to offer a loan at 50%, but there is someone from another country who would like to offer 30%, the second person will win this auction lot and you will lose. That's how we democratize interest rates and bringing them to as low as possible, but keep them profitable for lenders.
Mm-hmm. Actually, this is very inspiring numbers you're saying about, you're telling about it, because I guess even in Russia, low risk clients, they are not so profitable, and you have found some really interesting market and some really interesting solution. I've heard a lot about Africa, about growing of the fintech business there, but actually you're only second person who I talk with about that market. By the way, can you share a little bit what happens there with are there any banks? What's the situation there? Can you share a little bit about how Ghana lives, for example? Because from my point of view, this is some country in desert, and somebody take loans there. How does it work?
Let me try to find my photos from Accra. Give me a second.
Yeah.
What Africa means?
We can post it later. Put it to the video so the viewers can view it too.
I see. So the majority of people who have never been to Africa have the same opinion and understanding what Africa is. It's like palms, bananas, black people doing nothing, lying under the palms, into the desert, maybe some camels, just brooding around them. But Africa today is is something quite controversial. It's because yes, they are people who eat bananas and doing nothing, like homeless people. Yes, there are some homeless people here for sure, but I would say the majority of African countries, uh, um, countries with highways, with skyscrapers, with glass and concrete banks, you could find yourself on a road next to a pillar with about 20 signs that direct you to different banks on a single street. There are hotels like Movenpick, Hilton, Marriott, etc., etc. People there are quite rich. It's because I stayed at my business partner's mom country house, and it was kind of a proper villa with internal pool. And Africans today are growing very fast. If you would like to talk about, and I'm not talking about very advanced and developed countries like South Africa or Kenya. If you'd like to talk even about, let's say, Nigeria, a huge country, let me give you a question. What do you know about Nigeria? How big the country is? What's about Nigerian population?
Honestly, I don't even
Give me a
know.
guess.
I guess maybe 30 million people.
Nigeria is over 200 million people.
Yeah.
The capital of the country is a city called Lagos. This is a very advanced city with skyscrapers, with the majority of companies, like even from the digital industry, HP, Xerox, Shell Oil Company. Africans don't just mine diamonds and gold. No, it's in the past. Today, Africa is a growing economy, and it's the second fastest growing economy in the world. This is a place to be, and it's quite safe. Then say yes, you can be kidnapped somewhere in rural areas in Nigeria, but it's quite safe to go and walk around the cities. But I wouldn't say it's quite comfortable. It's because the majority of roads don't have asphalt or any surface. It's kind of an experience, but they are very rich.
This is super interesting what you have said. I've been in Asia, Vietnam, China. I see how fast can economy be changed by people, by their drive to create something something new, something, and they create very interesting solutions, especially in fintech field. And from your point of view, for example, Africa or Asia, this is two. It is two markets which are evolving in super high numbers of persons, and where is it better? Where is more of chances to create something in fintech field? Where is less of competitors and etc. I'm sorry for this long explanation, just trying to
The short answer is definitely Africa, but a quick comment in regards to Asia. I travel often to Asia. I have been visiting Tokyo, Seoul, Taipei, Beijing, Chengdu. I have been visiting many Asian countries. It's because I was a speaker there. I told about blockchain projects. I used to live in the south of China with my previous business. Well, we had a factory there, but the problem is you will never be able to build something in Asia. It's because, especially in China, it's almost impossible. It's because it's quite impossible to study Chinese. The majority of them, they don't respect English. I don't mean they don't speak, they don't respect speaking in English. That's why we don't need it. That's why it's never will be possible for you to achieve even something in the Asian market. Moreover, in China, they have a saying, it's called, they call white people white monkeys. And it's it's quite a bad word to be called a white monkey. And you will always be a white monkey, and you have no power, no respect in Asian countries. In Africa, historically, predominantly countries do respect white people. Fortunately or unfortunately, because of this historical shift of colonies, but Africans still respect white people. And there is possible to deal with locals. It's because they listen to you, they pay attention on what you're saying, and they do speak English, the half of it.
Mm-hmm. Very interesting point of view. And also banks.
And Sergey, one more thing in terms of African economies. As soon as you could consider markets like the US market, Canadian market, any Asian market, European markets, quite well developed and heavily regulated markets, it's almost impossible to invent something new and gain a real competitive advantage against your competitors. It's because you follow the same level of requirements by the law. But in Africa, you can do almost everything you want. In the legal field, I mean. But there is no limit for lending, for instance. It means I can lend out money at 100% interest rate per annum. But for instance, in China or in Singapore, it's limited by 6% per annum. And you can do nothing with this. It's because you have a central bank rate, you have this limit by the law, and you can do nothing between these two figures. In Africa, there is no limit. Again, you want to offer some fintech service like e-wallet. There is no regulatory environment for e-wallets. It's because M-Pesa is a good example, the Kenyan e-wallet or mobile wallet. They have, can you imagine, 385,000 field agents who do cash-ins and cash-outs for M-Pesa. M-Pesa itself as a company employ about 80,000 employees. Can you imagine a number? It's the same, I would say it's like a fifth part of Sberbank.
Yeah.
And they are not licensed. They do report to no one about their high commissions.
Very interesting situation. Do you think it would? How long will it be like that, or when it will be changed, and why the situation is different from European countries and even from Russia? Our central bank has 5%, something about that, the rate, and it is limited to why the regulatory are not so tight, is not so tight in Africa.
There are many reasons for this, but the paradise will continue for years. Everyone I met who have been visiting Africa at least once fall in love with Africa. When you say Africa, you probably mean, as you mentioned, a common meaning like a desert and nothing and maybe palms and bananas. But in Africa, there are 54 countries. 54 countries. The whole Africa, even the Lake of Victoria, is bigger by territory than the United Kingdom. Mm-hmm. It's a huge part of the world, and foreigners who lives beyond the continent, does know nothing about it. And it's like something that divided against of the rest of the world by own internal rules and law. But reasons why they're not so heavily regulated is because they are definitely behind the developed countries, maybe 5-10 years at least. And it gives to brave souls an opportunity to go there and to do something. Even a guy I know from Siberia, from city called Irkutsk, he has a business in Nigeria, online lending business. He has developed a mobile application, and he does nothing. He just offers this application to locals to apply and borrow money with no ID, with no credit history, nothing. Just borrow $2, give them back. Borrow $5, give them back, etc., etc. He made millions there, millions and millions and millions on lending there, still being in Irkutsk, with doing nothing in Nigeria personally.
That's just awesome, really. I haven't even thought that the situation like that, because really in Europe the market is highly saturated, and they try to move out from the well-developed countries. Fintech companies try to move to Poland, for example, to Czech Republic. When I think everyone who has a small team and not enough of resources to deal with all the regulations with the government, they have not, who has not enough of cash flow, of course, should take a look to evolving markets. And you explained pretty well why.
The beauty of those markets, there are kind of upsides and downsides. For those who was born in kind of a Russian-speaking world, or Russian states, let's call them so, it's quite comfortable place to be. It's because it's the same level of corruption, and with putting money into someone else's pocket, you can achieve everything you want, everything you dream about.
Mm-hmm.
But a downside of it, you can be kicked off of the market immediately. But if you have local friends, you can really do well. And the downside or upside or just a point, you have to be there. You have to put your feet on the ground. This is the only way to succeed. It's because we tried to develop Africa for a long time, but before we got our office there in Accra, we couldn't achieve some progress.
Mm-hmm.
Another point to mention is salaries. You could find very good people for about from $400 to $700 a month, and they will do a good job for you. Again, there are co-working spaces, there are affordable private offices, there are Mercedes dealerships if you want to buy a nice car to go there. Yeah, it's a place to be.
Mm-hmm. But the question in my head is, sounds like, how can anybody make a scoring of customers in Ghana, for example, if people doesn't leave maybe digital traces, how does it work actually? If, for example, we don't have any information about your potential customers.
It's because there is no need for scoring at all. Do you really want to perform scoring for your potential $3 loan? I don't think so. Mm-hmm. It's a game of numbers. You just give away your 10 grants, split it between 5,000 loans, and because of this is a game of numbers, they will pay back. and you don't need to be care of even the bankruptcy rate up to 40%. Is because you will not apply interest rate less than 70%. All of these bankruptcies and defaults are compensated by a high interest rate. That's it.
Uh-huh. I'm shocked, really. And honestly, very interesting country. I should definitely visit it.
Continent, 54 countries.
You live in Ghana, so I guess Ghana, Nigeria. We should research it a little bit more.
Nigeria is good as well.
Do you think trends like super apps?
Sergey, I think it's my time to go.
Oh, yeah. Sorry. It's really time to end the conversation because it's always limited within from 40 to 60 minutes. So it depends on attention of people. Anyway, thanks, Kosta, for sharing all your thoughts and all your experience with us. I hope soon you will find some time to dive deeper in some other topics.
Lovely. Thanks, Sergey. Have a good day.